Internal Revenue Service IRS tax news. IRS People First Initiative provides relief to taxpayers facing COVID-19 issues. Tax tip 2020-56, May 13th, 2020. Due to COVID-19, the IRS People First Initiative, there's a link to the People First Initiative here. There'll be a link to this in the description. Back to the text, provides relief to taxpayers on a variety of issues, from easing payment guidelines to delaying compliance actions. This release is effective through the filing and payment deadline, Wednesday, July 15th, 2020. Existing installment agreement. So if you have an existing installment agreement, in other words, if you had some issue where you couldn't pay the taxes, you owed money at some point in time, the typical kind of scenario would be to set up an installment agreement, basically saying that you're in good standing with the IRS. You're saying, hey, IRS, look, I can't pay you right now, but I want to be in good standing with you. I want to stop any kind of collection action that could take place, and I would like to make an agreement to go on the installment agreement. Now, that will typically remove any kind of further action, like a collection type action, penalties, remove possible penalties that could result from the late payments that would further accumulate upwards, but then you still have to pay interest on it. Typically, if you have an existing installment agreement, then the danger, of course, is to be in violation of that installment agreement. You don't want to miss a payment, typically, because if you miss a payment on the installment agreement, that will typically be a violation of the installment agreement. You could have penalties that would result in that, and you also have to go through the hassle of setting up, most likely, another installment agreement, which can be kind of a pain. But at this point in time, of course, there's probably a lot of people that may not be able to make the installment agreements are in that situation and might want some relief so that they don't have to actually cancel the current installment agreement. Back to the text. Under an existing installment agreement, payments due between April 1st and July 15th, 2020 are delayed. So that's going to be great. That could give some relief, again, to not lose the installment agreement, have to set up the installment agreement again, and could save people from additional penalties. Back to the text. Those currently unable to meet the terms of an installment agreement payment, there's a link to that here, or direct deposit installment agreement may cancel payments during this period with no default. So if you're having trouble making the payment, you're saying, hey, I don't want to make the payment. Note that if you do not make the payment, it doesn't mean that the debt is canceled. And the debt will still be there, but if you won't be breaking the contract, and you won't have to basically start up the new installment agreement, which can be a worry, of course. So they give some relief on that. Back to the text. By law, interest will continue to accumulate on any unpaid balances, and that's kind of the normal standard, because you're basically owing the IRS money. They're basically a creditor. A loan, it's kind of like they see it as kind of like a loan. And interest is just a typical scenario that you have to pay basically on any loan. So the installment agreement then will hopefully remove any further penalties from accumulating. It'll hopefully stop the IRS then from taking any further action, any further kind of collection action, and put you in good standing with the IRS. But typically then the interest will typically still accumulate. Back to the text. New installment agreements. People who can't pay their federal taxes can establish a monthly payment agreement. Now, this is a standard type of thing. That it's not new, in other words, to this current condition with the COVID-19. However, there's probably a lot more people that are filing their taxes and realizing that they can't pay the tax, and that's probably a worrisome situation when that happens. So note the installment agreement is there. That's typically the scenario. So if you file your taxes, you're on extension right now because they put a further extension on the 2019 taxes. But if you were to file the taxes and say, hey, I owe money and I can't pay that money at this point in time, what you want to do is still file the tax return, because you want to file on time if possible, because you want to stop them from having a late filing payment. So you're basically saying, hey, IRS, this is what I have. I filed the taxes. I want to be in good standing with you. Here's the information, but I can't pay it right now because I don't have the money to pay it. And therefore, what you'll do is set up an installment agreement. And note that if you were to file the taxes and not send them a check, so you filed electronically typically, and you owe them money, then you would typically send in a payment in some way, shape, or form. If you were not to do so, you'll probably receive a letter saying, hey, set up an installment agreement. So you still want to file the tax return. But if you're proactive to set up the installment agreement, again, you want to do that earlier to avoid penalties from happening, and just to be in good standing to make sure they don't take any further collection action on it, and to be in good standing with them, but you'll still have the interest involved in it. Back to the text. Pending offer and compromise application. Taxpayers have until July 15th, 2020 to provide additional information for pending offer and compromise. The agency generally won't close any pending OIC request before July 15th without the taxpayer's consent. Now, an offer and compromise is basically saying you're basically asking the IRS to forgive part of the debt that is owed to the IRS. Why would the IRS forgive the debt that's owed? It's kind of like any other lender, really. I mean, if you were to show the IRS, hey, look, this is my monthly payment. This is basically the debt that I owe, and there's basically this is just a general scenario. The general scenario would be, there's no possible way that I'm going to be able to pay off the amount of money I owe given my monthly earnings and whatnot. So it's just infeasible, not feasible that's going to take place. That's typically the argument for an offer and compromise, and therefore, would you forgive, at least a portion of the debt? And that's basically kind of a request. You can look for the whole process of the offer and compromise and how to go through that if you think that's going to be something applicable to you. There's a lot of factors that can go into that, but that's going to be kind of the general idea of it. So they have a deadline for the offer and compromise, and then the more information. Obviously, what they're going to want is basically, hey, how much money do you earn? Give me basically kind of like a balance sheet and income statement. Compare that to how much is owed, and then think about how feasible it is to be able to pay off the IRS, and then consider any kind of reduced payment possibly. So you could take a look at that process. There's a lot of people that work with that process, but note that a lot of the information is online if you do the research, and that's an interesting thing you want to look into. Back to the text. OIC payments, offer and compromise payments. Taxpayers can delay all payments on accepted OICs until July 15, 2020. Interest may accrue, and missed payments are due when the suspension period ends. Taxpayers can call the number on their acceptance letter to address their needs. Delinquent return filings. The IRS will not default on OIC for taxpayers who are delinquent in filing their tax return for 2018. However, they should file any delinquent 2018 return and their 2019 return by July 15, 2020. Non-filers. More than 1 million households who haven't filed tax returns in the last 3 years are owed refunds. The deadline to get refunds on 2016 tax return is July 15, 2020. Those who owe taxes on delinquent returns may visit irs.gov for payment options. The longer the debt is owed, the more penalties and interest accrue. So, in other words, if you haven't paid, you haven't filed your tax return for generally the last 3 years, then you may want to do that. You might say, hey, I didn't file because, I was just working. I just worked a little bit and I didn't earn that much money. I didn't owe any taxes, so I didn't file. But the main reason you want to file, because if you did any work and you got W-2 wages, they probably withheld income on it. And if you didn't make that much money, they probably over-withheld on the income. Or if you only have one job, the typical way the withholdings are set up is they're going to withhold too much. So typically, they will owe you money if you just have a simple W-2 type of return and you didn't file it because you didn't make that much money, and you're pretty certain you don't owe money. Then you might think about filing because you might be entitled to a refund on it. And there's typically a due date, like 3 years. So statute of limitations typically to be able to claim that refund by filing the tax return. So it might be something at this point in time that's worth doing. So they're saying the 2016 tax return, the deadline to get refunds on the 2016 tax return is July 15th in 2020. So if you haven't filed since 2016, then you might want to take a look at it and say, hey, it probably doesn't matter. They're not going to come after me. I didn't owe any money or anything like that, but they might owe you money, and so you might want to go in there and check it out. It should be a fairly easy thing to file those federal returns, especially if you're looking at the Fed. The Fed and the state are kind of different. So the federal returns are more standardized. The state returns are usually a little bit more difficult because the state to states are going to be different. So there's actually tools out there to file the federal returns, and might be able to find fairly cheap software to file the federal returns fairly easily. It's usually the states that add the complication to it. But in any case, back to the text. Field collection activities. IRS stopped field revenue officer enforcement actions such as liens and levies. Well, that's nice. Those are always unpleasant to find. All right, back to the text. Revenue officers will continue to pursue high-income non-filers and perform other similar activities where necessary. Automated liens and levies. IRS delayed issuing new automated and systematic liens and levies. That's good news too. Taxpayers experience a hardship due to a levy should reach out to their assigned IRS contact or fax their information to 8555-796-4524. Certifications to the State Department. IRS has delayed new certifications of taxpayers who are considered seriously delinquent. This affects a person's ability to receive a new or renewed passport. Existing certifications will remain in place unless their tax situations changes. Private debt collection. IRS will not forward new delinquent accounts to private collection agencies during this period. Also, typically good news.